All right, everyone, thank you for coming. This is the future of the American regulatory landscape. I'm your moderator. I'm Hank Greenberg, General Counsel of Vault Health, formerly General Counsel of Oscar Health. I've got three distinguished panelists up here today to talk about everything regulatory. And I know it's going to be a great conversation. And since we don't have a lot of time, I'll just dive right into it. And I'll ask each of our panelists in the course of answering my first question to introduce themselves very briefly. But my question for each of you is, if you could make one regulatory change to promote innovation in insurance, what would that be? And let's just go ahead and start with Rob, since he's a former regulator and he knows more about this stuff than any of us.
Hi, everybody. Robert Easton. I'm the Deputy General Counsel and Chief Compliance Officer at Marsh, which is an insurance broker and risk advisor, the largest in the world. As Hank said, previously I was, among other things, the lead insurance regulator in New York at the Department of Financial Services after it was created in 2011. So the question is, if we could change one thing about the insurance regulatory regime in the United States, what would it be? And I will give a very lawyerly answer of two things. First, I would not structure the system the way it is currently structured. And I'm pretty sure nobody would structure the system the way it's currently structured. We have the federal government dipping its toe into insurance regulation in various ways. And then you have 50 state systems, which creates a complete headache for people in business who are looking to comply with oftentimes what can be 50 state laws. It's sometimes consistent, sometimes conflicting, oftentimes onerous and complex. And that is a framework that has evolved over time, but I think it's fair to say nobody would have drawn this up on a blackboard if they were starting from scratch. The other thing that I would say could be done differently or improved upon is really a spirit of collaboration and partnership on both sides of the divide amongst both regulators and those who are regulated. So regulators are, especially in an innovative space, always playing catch up. They don't have the technology, the tools, the know-how, even necessarily the strategy that's underlying a lot of the sorts of things that business and the marketplace are trying to do. And that's an uncomfortable position to be in. And therefore, oftentimes, not only are they at an information deficit, but when they are working with the existing framework, it may not gel with kind of where the state of play currently is. And so you're often, as a regulator, trying to fit square pegs into round holes, which isn't a great dynamic. And a lot of times, too, it feels like there's a chase of cat and mouse where you have innovators who are constantly changing their own business dynamic, and the regulators are trying to catch up. And if there is an instance of square peg, round hole, then they look to bring the hammer down. And that's not a great place to be. And that doesn't help innovation and growth. At the same time, I think those who are in a position where they could be regulated could approach the regulator themselves with a greater degree of collaboration. Right? This is what we're trying to do. Let us bring you on the journey. Obviously, you care about consumer protection and solvency, making sure that people in the insurance space are standing behind the promises they make and that consumers understand what they're buying. That's fundamentally what insurance regulation is all about. And instead of keeping things at arm's length or even adversarial, to embrace regulation as a differentiator, as an opportunity, sometimes even as a barrier to entry for other competitors, could be a really good and smart thing. And if the approach of those who are regulated were that I'm going to go to the regulator and tell the regulator, whether asked or not, things that they need to know, I think it would benefit both sides of the equation.
Thanks, Rob. And I'll kick it over to Jonathan now.
I'm Jonathan Witte, former Chief Counsel at Cigna and Senior Vice President. So first, Rob, I want to say that was great. Secondly, when you were in the New York Insurance Department, did you say the same things or not?
I did. I tried to really encourage this spirit of collaboration and encourage people because, especially when I was there, it was at the dawn of Uber and Airbnb and the likes of those innovators. And so it was clear that the regulatory framework didn't work.
Yeah.
And that we needed to kind of have meaningful discussions.
Yeah, and I think your points are great. I would say that, of course, as a lawyer, I have to give on the one hand and on the other, but I really do want to be a one-handed attorney today, and really echo what Rob said, which is collaboration is the key. I think you have a really tough time in startup companies, early stage companies. The large companies have phalanxes of lawyers and regulatory folks and compliance folks who are really focused on this, as they should be. It's tough, I think, as a startup, as a young company, to have all of that. So what Rob said, I think, is key, is to collaborate with the regulators to really explain what value you're bringing to the market, because the regulator is trying to protect the consumer, but what you're bringing is really affordability and choice. And those are really valuable. I think that regulators would really appreciate that. I think the other thing that frequently regulators may be running into are their own regulations, which were designed, 50, 60 years ago. And now you're bringing new technology that doesn't really match. So I know at times, even things like wearables were perhaps deemed a kickback or a rebate, and that regulators had to say, okay, this is okay. But regulators may need to look at those regulations and frankly change them to really meet today's needs, because I think that's really where I think the regulator plays a great part. And I think the regulator can also bring groups together. They can take their regulations, think about it as maybe a principled approach, where maybe not every I is dotted, not every T is crossed, but you're meeting the goals of the regulation. And I think regulators also have to, frankly, get educated, and you can help in that process of really understanding what the technology is that's out there and how it's benefiting the consumer.
Brandon, over to you. You can tell us what, as lawyers, we've been missing in this whole conversation.
I'll try to keep up with the big brains on stage. I think about innovation in any industry in a very similar way. You try to get world-class talent, so entrepreneurs, technologists, and operators in the same room as smart money. And in order to get those two things in the same room, which if you get world-class talent in the room, you can remove your reliance on intra-industry talent, which is really important for getting the right number and level of technologists. Also, if you get smart money in the room, you can have someone that knows what they're talking about for investing in those types of companies, have highly incentivized dollars behind and pushing the industry innovation without funding it yourself inside the industry. So if you can get those two things in the same room, it takes three components to do that. I'll call this the nerd party flywheel creation. I think that my investor friends will like that. But as a fellow nerd, I think everyone appreciates that on the stage. So the nerd party flywheel creation takes three parts: market, product, and team. So when you think about market, insurance is a vertical market. It's similar to financial services or banking, highly regulated, slower moving, slower to cross the technology adoption curve chasm. And in order to cross that chasm, you need to get the right technologists in. But also, it's got pretty sizable budgets. It's got ubiquitous budgets, and it's got pretty long-standing budgets. That allows for much less entrance into the marketplace, which means there's less competition, as well as once you do have an entrant in the marketplace to provide that innovation within the regulatory space or any space within industry, you've got pretty fast market capture. So the market is ripe for innovation in insurance, for external dollars and external technologies to come in and build something very fast that scales. Then you have product. This is the crux of the answer to the question. Within product, in order to have product market fit for a company building innovative solutions in the market, you don't want to, you want to make sure you're not solving the problem 100 times and recreating the wheel 100 times within the same industry. So you want to create product market fit that can scale to all use cases across that industry. And you need to have two specific things for product market fit: depth of problem understanding from one person or a group of people, and then world-class technologists. And we'll talk about that in a second. But depth of problem understanding, you've got serious hurdles for vernacular in the industry, and a lot of lifers, and a highly defensible, context-rich, needed set of knowledge set. So you've got a lot of lifers in this industry that have a lot of that depth of problem understanding. The challenge is combining that with world-class technologists to solve those problems at scale. So in order to get world-class technologists, you have to think about what you're competing against for those technologists. And pretty sexy industries to go out there and like solve problems in. As an example, go work at Facebook or Twitter or LinkedIn as an example. I totally understand that, but you can make insurance problems really sexy, and you can make them sexy to solve, and that's the goal. So this is getting to the nerd party flywheel, by the way. So data, I think, is the short answer to your question. If you have well-structured, clean, real-time, API-accessible data, no matter what regulations or regulatory changes you make all over the map, you can structure that information, pull it into a core business system, internalize that, interpret it, set up the settings for your own interpretations across different companies, and then send out transactions and operationalize those changes in a pretty effective way. So if you can do that and start solving unsexy problems in a really sexy way, you get a nerd party flywheel. If you build it, the nerds will come. And that's what you need to do. You need to structure that data, and you can have an absolute party with technologists to think about very innovative ways of doing that. As two examples, one would be what AgentSync does. So I'm the COO at AgentSync. Sorry about that. It's a little late intro. So what AgentSync does, we pull down from NIPR, the insurance regulatory database source of truth for licensing in the US. We pull down all the licenses, renewals, terminations, appointments, regulatory actions against the individual as well as the entity, and a biographic and firmographic profile. We're able to, at scale, validate those licenses, make sure that you can transact all 51 jurisdictions at scale and bulk for both licenses, renewals, as well as appointments and terminations. And it was the first time that that's been able to be done without spending 2 years or 3 years Googling everything and then putting it into one spreadsheet and then going to 51 different jurisdictions, Department of Insurance websites, and typing in and cranking that out with an army of human beings and spreadsheets. So you create the solid data structure and putting that data and regulatory changes into a digestible data format, and the nerds will come. And I think that that's the biggest way to do it.
The nerds will come. That's going to be part of my mantra from now on. I think we don't often think of insurance as being the type of industry that's amenable to technology, which is the whole reason we're here and the reason we're talking about it, but it certainly can be. I think that often the regulatory constraints are acting as sort of the guardrails for innovation. And part of what we're trying to do is identify for regulators when those guardrails really should be in a different place. And that's something that I think I'm hearing from each of our panelists, is that very often, I think, Rob, you put it as like a sort of square peg, round hole. And we're sort of going into, our regulator friends and the ones who are charged with protecting consumers and making sure the market works the way it ought to, and trying to get those holes kind of squared off, if I can extend the analogy a little bit. I will pick my own pet issue out of a hat to highlight here. And this isn't one of the kind of like if I were a king for a day, but it's one that I think highlights part of the disjunction between the innovations that a lot of the companies represented by people here are trying to make and some of the sort of old model of regulation that we see still in effect in places like New York and all over the country. And that is something as simple as prescriptive content on an EOB, an explanation of benefits for an insurance beneficiary in health. And you can go to a lot of states and find prescribed content. It's got to talk about using jargonish terms like allowed amount or coinsurance, things that, at least from my experience dealing with a fair number of consumer complaints as the general counsel of an insurance company, consumers don't really understand. But nonetheless, in many states, we prescribe this type of content directly on the forms that we send to our members to help them understand the way that their premium dollars are getting spent. It doesn't work all the time, but one alternative model is to strip those requirements away and let companies that are on the forefront of user experience and trying to do the right thing, communicating with members, figure out for themselves how best to present that information, and then provide a resource for those members to get more information if they need it. It could be as simple as a phone number in type 52 font, and a good SLA around people on the other end of the line that are going to pick up the phone and tell people what they need to know. So that's just one of my little pet peeves, but an example of the way in which providing information sometimes can actually be more harmful than helpful.
I think Hank, you're also kind of going to almost like a principled approach, where it's more like that, where you let companies really focus on what the need is and try to meet the need of the regulator. And I think that becomes critical, as opposed to, do you have every single thing down? I think also it's interesting that perhaps regulators could try a sandbox type approach, where for new companies, for tech companies, really doing a little experimentation, and maybe be a little looser, have a little more self-regulation, report back, and as the companies grow and develop new products, then you can tighten it up a little, but maybe have a sandbox as well.
Yeah, I would just add, it's always easier to fix the roof when the sun is shining. Mm-hmm. And so if you have a pre-existing relationship with your regulator, or you've brought your regulator on a journey, this is what we're trying to do. This is the direction of travel. We're not trying to pull a fast one on consumers. We're trying to make the experience better. With respect to EOB, we're just trying to put it into plain English because it will be helpful to you, regulator. You'll get fewer consumer complaints when we actually can explain in terms people understand what exactly the procedure was or the treatment that was rendered. It makes perfect sense. It's much easier to have that conversation if you already have a relationship with your regulator. If your only relationship with the regulator is, I need this, I need that, I need forbearance, I need you to get rid of the seasoning requirements about how I can write insurance, it's much tougher to then have the regulator say, I get it, go play in the sandbox, come back to us when you're ready to have a conversation.
I do think regulators are certainly willing to listen. And if you're bringing something that the consumer really benefits from, I think they are receptive to that.
A good example, now going back a lot of years from my own experience, was about telematics, actually. And this notion that you would put something in your car, if you're a purchaser of insurance, that kind of assesses how you drive, a black box, if you will. And regulators don't love black boxes. They want to understand what's going into the data that's collected. But here's an instance where it could help underwriting. It could control behavior. People could drive more safely if they're getting feedback on, you tend to accelerate really hard or hit your brakes, ride your brakes all the time. And that was a good innovation. A small thing, and look, not super innovative at this point, but at the time, very meaningful.
I'll add one quick thing to that, based on that exact example. The more often you're in your car, less often you're in your home. If you have that data API accessible, underwriting the risk in real time versus peanut butter spread across a massive model of, if you're in your car less, lower rates, in your home more, higher rates for the home. That's another really kick-ass way that you can get some really good software engineers and really good teams on some real-time data and make it not just very consumer-friendly, but business-friendly across the entire industry for real-time underwriting risk, which is cool.
Yeah, I would also add to the conversation, and I think maybe a lot of what we're talking about, both in terms of the substance of what we want to communicate to regulators and shape the future of the American regulatory landscape. One of the things we're really talking about is diplomacy or credibility, right? I mean, I think very often in the tech world, we feel like we can sort of march in and say, well, we've got a bunch of answers. This is an old industry. It hasn't been disrupted. We can take data, we can revolutionize it. We want forbearance from a seasoning requirement because we're going to come in and do things that you've never seen before. We have all the data, so we can deliver results that you might not have seen before. That sets the bar pretty high. And if you're not cultivating a relationship after you come in and get that green light, you might find yourself a year or two later coming in hat in hand saying, we screwed up, we need help. And all of these lofty promises that you made are now, a detriment to your company. But not only that, they're sort of, cultivating an impression among the rest of the tech world that, whenever we see someone new coming in, maybe we ought to be really careful because they're going to promise us the sun and the moon and the stars. And it's just not going to happen. And so with that, I would like to not shift gears so much, but I do want to talk about another dimension of how tech companies, carriers, how everyone in our ecosystem actually implements or operationalizes new regulation, because we're seeing a lot of it. It's across privacy, cybersecurity, you name it. There's a lot of flux, a lot of change. What's hard about that? What message do you want to send to regulators and also to the companies you work for about compliance and about actually, interrogating all these different patchworks of state laws and understanding how to build around them? Because I know that's a problem that not only us as lawyers and compliance people face, but technologists too. You have to think about how to deliver a product to market that's going to accord with, a 50-state regime. So I'd love to hear a little bit of thoughts about that.
I maybe will just start off with, when I started as a regulator, having worked as a lawyer for a number of years, I thought if I'm dealing with a big company, I understand I'm in a resource constrained environment. I work for the government. I get it. I've made some choices. I may not make as much money as I could in the private sector, but there are other advantages. But one of the things that I always felt was, okay, we may not have the best data and we may not have the best systems, but surely in the private sector, especially in innovative sector, they'll be able to do anything, and so if regulatory requirements are laid down, if we need data, if we need information rolled up in a particular way or format, just hit the button, just go and get it, because how much of a big deal could it really be? And I think regulators, I'm using my own example, don't have an appreciation of how hard it is to source data. And you may have sourced it, but in a particular format or a particular way, or you're building it so that you have a data lake. I now work for a company that's 150 years old, and some of the issues are still the same. We come across a lot of data, but how do you organize it? How do you monetize it? How do you give it to clients? How do you give it to business partners? How do you give it to regulators in a meaningful fashion? Because we're awash in data. It's not a problem about having the data. It's about how do you harness it? And I think that until you've had a full appreciation of the difficulty of doing that, whether you had a vantage point in the private sector or from a government perch, it's very eye-opening. And sometimes I think regulators don't have that appreciation, or think that because they're asking and because there is a little bit of an imbalance in the power dynamic, that stuff can just be produced on the turn of a dime.
Yeah, I sometimes worry that regulators come to conferences like this and hear about all the great things that tech companies are doing and then say, well, you can do it, right? And we know, to your point, that's not the case. I also think that the legacy systems are really a challenge, and they were built for certain things, and now they're being asked to do other things. And that's a very expensive switch to do. And even with new companies, I'm sure Brandon would tell us that that's not even so simple with new companies.
I would just add here to the conversation, this is sort of putting my own 2 cents. I think very often there's a sort of diplomacy credibility dynamic. When you're on the receiving end of a new set of regs as a carrier, as a technology company, you hope that that's not the first time that you go in and have a conversation with a regulator about how hard this is going to be. We don't have infinite resources to have, government affairs people sort of canvassing every state capital and talking about the difficulty of compliance. But I think for the stuff that really puts you into the red, that's a place you need to be. And you need to be able to try to at least get in on the front end and say, here's another way to think about it, or here's another way to do it. Or to the degree you're not going to budge, Mr. Regulator or Ms. Regulator, here's what we think that we can do within this time frame. And we're telling you now, not because we want to sort of, take our ball and go home, or say that we're going to be defiant about it, not at all. But you do want to be realistic about what the costs on the industry are, because very often the assumptions underpinning any set of regulatory mandates can be that certain companies can just do it all, or this is just a matter of willpower, or just putting the money where it needs to be, rather than re-engineering an entire process that might legitimately take months or years. So that's one perspective I have to offer. But Brandon, I'd love to hear from the tech side. Like, you've got a NIPR database that you're mining. You've got to think about licensure and appointment requirements in 50 states. Are you doing linear optimization? Like, how are you, like, when you build a product, what are you thinking about when you're going to go out and sell it to people and say, this is your compliance solution?
Linear optimization, I'm just going to go with that. It sounds very nice. The short answer is that yes, we are. But I think one of the most challenging things about the shifting landscape in regulatory changes across 51 to 56 jurisdictions, depending on where you are, is operationalizing that. It can become a challenge when growth and compliance are competing priorities. And that's almost never not the case. So if a company wants to grow and they want to grow their distribution channel, whether internal or external, internal as an agency, external as an MGA, carrier, even IMO, FMO, they need to, one, keep up with regulatory changes as they go, and then two, operationalize that. And I think one of the only ways to do that is through code, because if you have shifting landscape at all times, I'm sitting with a bunch of lawyers on stage. I don't need to say this. Like, compliance is, one, a gray area, and two, it takes a lot of interpretation to understand what to do next. Then operationalizing that in a company of a scale of anywhere between several hundred people to 150,000 people is a nightmare. It is really tough. So if you can ingest all that information via a database source truth like NIPR as an example, and you can access that information, interpret it at scale, and transact at scale. If you need to do the licenses, renewals, as well as appointments, terminations, if you can do that at massive scale, which is the first time the industry's been able to do that with AgentSync as an example, then you can solve that problem via code, and you can make, again, whatever changes you'd like to make it, one, scalable, and two, such that if you want to grow your distribution channel, it doesn't become that compliance is a competing priority for that or a lagging priority for that. You can make those two things real time, which I think is pretty cool.
I may sit where I stand or stand where I sit, but I actually think that compliance and growth don't have to be antithetical. It's not a binary issue. And I further think that not only can compliance be a catalyst for growth, but linking back to sort of the regulatory theme of the panel, if there are gray areas in new regs that have come out, it was at least always my approach that if there was a good faith read on the regs, even if they're not models of clarity, if you could establish that, look, we read them, we grappled with them, and this is what we understood them to say, that's a lot better position to be in, even if the regulator at some later date says, that's not how I would have read them. As long as you can offer a good faith, non-embarrassing reading for what you did, I think you get a little bit of safe harbor. And it may be that the regulator itself doesn't know, or there's more guidance forthcoming from the legislature or somewhere else. But as long as you're kind of within the four corners, it doesn't have to necessarily be every last item. But if you can broadly bring yourself within scope, I think you then insulate yourself from Monday morning quarterbacking.
Yeah, showing compliance is really critical, even if you're not perfectly there. But I think it's also a selling point. If you're selling a truly compliant solution, that's really actually a big thing to sell too, and to really advertise that.
I love the perspective that you have from both the private side as well as being a regulator, and one, establishing that relationship up front on an ongoing basis, and then two, having an argument that turns into a policy that you can then stand upon. Again, I talk to a lot of general counsels as we're having these conversations and attorneys, and again, interpreting one way or interpreting another, as long as you're within, again, those four corners, it seems like that is not just a common trend, but what the most intelligent businesses are standing upon as they're interpreting the new ones.
Yeah, and look, I mean, you ask for forgiveness, you ask for permission. Sometimes you make these judgment calls. I'm not suggesting that you go to a regulator for every last thing and say, is this okay? Is that okay? Like, that's probably not going to be good for how you want to run a business. And probably your regulator doesn't want to hear that level of detail or have that level of engagement. But you need to be able to document and defend why you did what you did. And if it's a really big, like, this is the fulcrum on which the product is going to turn and we need to get this right, well, then maybe that is when you go in and have that conversation and say, this is what we're about to do. And, you might not get an approval, but a non-disapproval is something you can also run with, at least in the short term.
I don't want to interrupt our conversation because, we could literally go for hours, although I think the difference between an approval and a non-disapproval is probably something that is most salient to the lawyers sitting up here. But since we only have maybe about a minute left and we do have some questions, maybe we'll just tackle the first one in the spirit of the title of this panel. And so maybe in just one sentence, if we can do it to wrap things up, what are the most salient regulatory trends you anticipate in the coming decade? If you had to maybe just pick one that's top of mind, and maybe we can go down the line, and I'll volunteer to go last so I can think up a good fourth one if the top three are already taken.
Climate change and cybersecurity.
I'm happy to go with both of those, but I would add maybe social inequities. I think COVID really highlighted that, and I think that's going to be a big issue for regulators to look at.
I was going to say data privacy. I think that different interpretations on a state-by-state basis can make certain markets more attractive or less attractive to do business in. I think that's going to have both micro as well as macro impacts on the industry.
And as usual, my top three answers were already taken, but I'm going to take privacy as mine because I think that is the thing that as my career progresses, I find myself spending more and more time on just every year. And I think that that trend is going to continue. So that's our panel. We really appreciate your coming. Thanks so much for sticking with us. And thanks to our three great speakers for taking us through these tricky issues.